Hi everyone, I am Madhavi Reddy, I am certified financial planner. Welcome to HyBiz channel. So this video is all about the taxes. So nowadays many of them have entered into this equity market directly. They are opening demat accounts. Right now currently there are about 10 crore demat accounts are there in India, and especially in the pandemic there are so many demat accounts have been opened, and people have wanted to buy stocks and do trade in the stocks personally on their own demat account instead of going into the mutual fund. So many have taken this dive into equity markets directly. They are doing trading, they are doing buying the stocks for the short term period, and like that, like futures and options they are doing it. So how about the taxes? How much tax we need to pay on the gains which you have might arise in this equity markets? So let's start with holding. That means if you have taken a delivery of the stocks and holding it and selling it, then whatever gain you have received, that can be divided into two parts, that is short term and long term. If your holding period is less than 12 months, that is less than 1 year, then the gain is called short term capital gain, and you have to pay 15% tax on that. If you have got any short term losses, then you can set off with either long term gain or short term gain for the about 8 years. So this is all about short term which you might arrived when you are holding less than 12 months. So let's talk about long term gains. So if you are holding any stock more than 1 year and then you had any gains out of it on buying and after selling on that, then you have to pay 10% tax after 1 lakh. Example, if you have gained 5 lakhs of income, first 1 lakh is not taxable, rest of the 4 lakhs you have to pay 10%, that is 40,000 you have to pay. If you have arrived any kind of long term capital losses, then you can set off only with long term capital gains that you can set off up to for the next 8 years. So let's come back to those people who are trading. Like intraday trading, especially they are doing in the same day they are buying and selling, then for them like derivatives or it can be a futures, it can be options or intraday, whatever these things, if you are had made any gain out of this, then you have to pay tax as per your slab rate. If your slab rate could be 10%, 20 or 30%, then you have to pay tax as per your slab rate. But you have got any losses because it has treated as speculative income in the trading, intraday trading or futures and options and all. So if you had made any losses, then you have to set off with only speculative gains, which is only for the next 4 years. And how about the dividends? Because when you have made any investments in the stocks, you receive dividends. So right now dividends are taxable in the hands of the investors for the rate as per your slab rate, because now there is no dividend distribution tax. Dividend distribution tax has been removed, so the amount directly credited to the investors, the entire dividend, so they have to pay tax on their dividends as per the slab rates. So these are all the tax and tax related information about the stocks for the people who are investing directly, holding the stocks or doing intraday or futures and options.